All right. So, good morning again to everyone. Thanks for being here. Thanks for being on time. I know it feels like we've not seen each other for ages. Okay, sorry, I was just checking the chat in case someone was asking me a question. Someone did ask a question. Is it the same link for office hours? Yes. Let me just go back here. If you want to see me today in office hours from 1 to 2, it will always be the same link. I've made it a recurring meeting for the whole semester. So you're welcome to come at 1 o'clock. And then, okay, I really like the videos. I'm assuming, see, that you're referring to these videos. You can tell me if that's the videos.
I meant the videos when you practice homework. So if you don't
Oh,
get one question, they give you
oh yeah,
if
yeah. Got
yeah
you.
to
And Wiley Plus. I
yeah,
understand. Okay.
it's great.
That's great. That's great. All
I
right. Yeah.
actually two of them even though I didn't know about liquidation.
Okay.
I
Cool.
just follow the videos and they explain it very clearly.
That's great. I'm glad. So there's a plug for the solution walkthroughs on Wiley. If anybody is stuck, there's solution walkthroughs. I haven't put it up yet. I just realized this now. But I do also have some extra videos where I actually go through all of the different topics for partnerships, where I'm explaining it to you guys, not to this class, but like in the past. So I can put that up also if people need it. I don't want to overwhelm you with a lot of support materials, but you can pick and choose what you want to use. So, just to reiterate here where we are on the calendar, it's still early days, obviously, but you don't want to lose sight of things that are coming up, because for some reason, you know how it is. It always feels like everything is far away, and then it's like right on the due date for something. So most people created a Wiley Plus account. Thank you. You would have heard from me last week via an email. There were a few people that I emailed in the class to say that you still had not created a Wiley Plus account. You absolutely have to have one. There's no excuse because the Wiley is free this semester to you. So you need to use the textbook information, the URL that's over there on the textbook information tab, and get going with creating the account if you're way overdue now if you haven't done it. So by last week, I was sending out notes to people who were overdue. I haven't checked again to see if they all registered. If you are having a technical issue, like John was explaining to me, is having a technical issue, please let me know so that I can help you, because you don't, again, we have homework and stuff coming up, and it's a new system, so you need a little bit of time to get used to it. I mean, it's not that involved or that hard, but the point is you don't want to leave yourself in a situation where you have less than a day or something to do the homework. It's not going to be enough time, especially because I know many of you are working, you have other classes, you have all kinds of stuff going on. And the homeworks are important. In fact, let me just go back here to remind people in case they forgot. The homework is 30%, right? 30% of your grade. So that's going to be 5% per homework. So if you sleep on chapter 12 homework and it's over, it's due and you haven't done it, that's 5% gone from your grade. So already automatically the highest grade you can get in the class is 95%. And obviously that means that you would have to get 100% on everything else that we do, which is not necessarily going to be the case. So please don't throw the homework grades away. I specifically make the homework high, the percentage is high, because people need to practice, because the tests and things are very similar to the homework questions. And then we've already discussed personal bio. I have other classes also, so I've been reading through bios, but I'm not done yet. When I'm done, I'll talk a little bit about what you guys wrote. So That was due last Wednesday, and that was 2% of your grade. So far there's 7% of the grade, or at least, I mean, there was 2% of the grade on the table, and there's another 5% that is on the table between now and next week, Tuesday. So please, please, please don't procrastinate. Try to get in there and do the work. People were saying it felt like it was long since we've seen each other. It was long because I saw you Tuesday, because last week Thursday was a holiday. We'll continue with chapter 12 this week, and then your homework is due next Tuesday, at which point we'll start with chapter 13. Again, a lot of the stuff seems far away. Because it's 12 weeks, right, that we're together. But I want to make sure that you're in Wiley, that you're doing the work, that you're asking the questions, and so on. Let me check if someone's asking me something. Okay, someone's having a problem with their computer. That's fine. All right, so that's about it for the calendar. Does anybody have questions on anything to do with the calendar?
Professor,
Yeah.
if I will need more practice before the, are we going to get more practice before the test and the quiz?
So what I did over here under test and quiz information, because the test and the quiz is just on 13 and 14, not on 12. This is extra practice for the exam that's up there already. It's not going to be meaningful to you now because we haven't covered that material yet. But when we cover the material, you'll have the homework. And if you want extra practice, you will have it over here. Okay.
But aren't we doing chapter 12 right now?
We are doing chapter 12, and as I
So we're
just
not
said,
going to get quiz?
test
on it?
1 is on 13 and 14, not on 12.
So we're not going to get tested for chapter 12?
Not in the test and not in the final. I treat chapter 12 like a separate exercise because it's on partnerships, and the students become very confused in the test if I combine companies, because 13 and 14 is companies and partnerships. So I've basically let you do the homework for chapter 12. You've got your 5 points or 5%, and that's the end of chapter 12.
Oh, perfect. Thank you.
Okay. Other questions? Yeah, I mean, I don't think anyone's going to lobby me to add chapter 12 to the test, right?
No, we're good with that.
Yeah, exactly. Now
We're fine.
I've seen how people have struggled in the past, and it's not worth it. Partnerships is not a huge topic. I mean, it's a big topic for us now, and you need to know how partnerships work, but it's not like in accounting in general. It's not going to be a topic that is so massive that I feel the need to create all kinds of tests around it. All right. So again, if you want to know about what's in any test or quiz, all these things are already up here. You don't have to overwhelm yourself by reading through them now, but in case you are wondering, that's all there. The Zoom materials, the people who asked me for the link to the Google Doc, I put it up there. You should only be a viewer, not, being able to edit, because I'm working on it as we go through the class. And then the notes for chapter 12 are also here if you haven't already downloaded them. Remember, all the notes and exercises and things that we're doing in the class are here under additional notes and exercises, but I also just brought some of the stuff into the Zoom tab. Into the Zoom tab in case people want everything in one place. And then the last thing I'll say is, if you're looking for the class lecture recordings, just copy and paste this URL into your browser. You'll get to the YouTube channel. There's a playlist that's been created with the lectures for BTA 112, which is us. So you can always go back and see, what it is that you may have missed. And, about that question about what's on the test or whatever, and the quiz, I just want to go back here and remind you that you see these things in the grade weighting. It tells you what's being tested. And remember, the final exam covering the entire course, but it won't cover things that, I'll tell you what it's covering. It's not going to cover certain items. And if you really are curious about what's in the final exam, it's already listed, right? but it may not make sense because we haven't covered a lot of the material yet. Okay, so
Professor,
mhm.
the practice you give us here, the attached files, does it have the answers also? So
Yeah,
we can
there you
compare?
can see is
Okay,
the
perfect.
solutions. The solutions are all there. So you can do the work and then you check the solution and then you see what you don't know well enough and then you go back, right? And study those pieces. That's how you want to study for. I mean, I'm not just talking to you, see, I'm talking to the whole class. When you study for accounting, you don't want to just look at the question and look at the solution and be like, oh yeah, I definitely would have gotten that right. You actually want to look at the question, sit with a blank piece of paper, try to answer the question as if you are in a test, and then grade your work and see what you didn't understand. Go back to study that material again, and then try and do the question a second time in the hopes that you are going to get a better score. And yes, it sounds like it takes a lot of time, and it does. Okay, to be successful in these classes, I'm sure you saw it in accounting one also, you have to practice. It's not you don't have to be a genius to excel at accounting. You just have to be very disciplined and pay attention to detail and understand that a lot of the stuff is driven by principles and rules. And so it's in the practicing that you're going to start seeing the pattern of the questions and how to answer them, and also see where you keep making mistakes, and then go back to the textbook and learn what it is, why you're going wrong. All right. So I find that often, and I don't want to go off on too much of a tangent here, so I'll just speak for another 10 seconds or so. I find that often students get stuck on the homework or stuck in the tests for two reasons. One, not reading the textbook or any type of theoretical material and just trying to do the questions cold, like without even knowing what the rules are behind how we do the accounting for certain things. You'll definitely get stuck. And people also get stuck or lose points on the test because they don't practice enough. You can't do a homework once and then think that you're ready for a test. It's impossible. All right. So please factor the time in for this class as much as you can, so that you can be successful. And that's part of why I'm saying it might seem like it's far away to the 28th, but guess what? You have an opportunity to get 100% on the chapter 12 homework, which means you'll have 5% in the bag. All right, that's a big percentage of your grade that you would have already put in the bag. If you choose to procrastinate and get 0, then it's a loss of something that was very easy to attain. So please start the homework. Listen to what your colleagues are saying. There's readings and stuff that explain the work, so you should be able to get through it. Okay, so I'll stop with the preaching, right? The preaching over there, and just remind you, if I go to the student view over here, let me get this thing over here. If I go to the student view over here, you can see that there's the chapter 12 readings that she was talking about. It's the solution walkthroughs that she was referring to. It's literally people taking you step by step through how to solve a problem. The readings are all about, the different topics that we discussed before. And then the homework is going to be questions around, like we said, formation, splitting income, financial statements, and liquidation. All right. So that's the story. Let me see where I can put this where it's not gonna get in our way. Okay. So last time when we were together, we got up to the point where we were discussing allocating net income, right, between partners and the ways in which that can happen. And so I guess we'll just pick up there. I know that we finished with, for those who are really following, I'm trying to see. I know that we finished with example 5. We were busy with the T account for Arbor's Capital. I will pick up there in a second. I just want to remind us of the rules and things, especially since people said, they can barely remember what we were doing together. So the point here of this part of the work is saying that when a partnership is created, the partners decide, as part of the agreement, how they are going to split net income and net loss. And so it can be something simple, like it's just a ratio like 60-40 or 6-4 or 2/3, 1/3, 70-30, and so on. That ratio would be given to you in a question. Or they could have, the fact that partners need to get salaries. So first you would allocate the salary, and then anything that's left over gets, allocated on some ratio. There may even be interest, as it's stated as a percentage of the partner's capital balance, or given in the question as an amount, and then the remainder, whatever's left. Okay. The remainder is on a fixed ratio. So when we're looking at questions to do with splitting net income, it's important to read the question carefully to see what is going to be allocated to the partners. Is it salaries? Is it interest? Is it, some other, split of the fixed ratio? What's going on? And it's possible not to overcomplicate the situation, but I'll show you in another example here in a moment. It's possible that after we've allocated salaries and interest, which by the partnership agreement, so by law, we have to allocate to the partners, that there actually isn't enough money to allocate all of that. So there's like a type of a deficit, right? A negative balance. So we may have to take money away from the partners, and I'll show you how to do that. And so just as a reminder, the amounts that are being allocated are the net income or net loss, right, of the partnership. So that's the ending balance on the income statement. That is what we are working to allocate. And then last time I went through a whole long discussion with you about closing journal entries. That's from chapter 4 in accounting 1. And I just want to remind you that when we are working in this chapter, the two closing journal entries that we're focusing on is transferring the net income or the net loss to the partners. In this case, we're focusing on net income. So credit each partner's capital account and debit the income summary. And then we're also focusing on closing the drawings account, because we said that the drawings balance that exists in the drawings account at the end of the year relates to that specific year. It makes drawings a temporary account. And so because it only relates to that particular year or period, we have to close the account off at the end of the period. And drawings normally has a debit balance. So in order to close it, we have to credit the drawings account, and we debit the partner's capital account. And when we were doing this example here with Arbor and Barnett, you can see that we were doing, the same journal entries. I'll just read the question again to fully, I guess, refresh everybody's memory, and then I'll work through the solution and finish it up. Okay. Well, there's a lot going on today. Okay. So let's read example 5 quickly. Assume that AB company has net income of 32,000 for 2018. The partners Arbor and Barnett share the net income and net loss equally. And last week Tuesday, you guys told me that means they get 16,000 each of the income. Drawings for the year were Arbor 8,000 and Barnett 6,000. Right? So that's the drawings. Prepare the closing journal entries for the partnership, i.e. in essence, transfer net income to the partners and close drawings. And then they're asking for T accounts. So last time, and if you were keeping notes or something, you should have had this in your notes. Otherwise, feel free to click on this Google Doc in the link that I put in the Zoom meeting materials on Blackboard. I do encourage you to open something if you can, whether it be your notebook to take notes or follow along on your screen or something, because it's just way too easy to get distracted by other things if you don't actually have something immediate to look at, right? So at the moment I see that there's like maybe 2 people who have actually joined this document. That's fine. If you are using the other documents, the solution and the questions, that's okay. But please, you know, you're paying me my salary to teach you between 10:30 and 12:45. Please make sure that you get your money's worth, okay, by actually following along in whatever way possible and not wasting this time that you paid me for. All right. So example 5 here, we say we debit the income summary, which was exactly what was said on in the theory, right? It said that's the way the closing entry works. And then you credit each partner with their 50% of the net income. And we spoke at length the last time about how the income summary summarizes revenue on the debit side, expenses on the debit side, revenue on the credit side, and then ends with net income or net loss. And I showed you how we close off the income summary as well. In fact, let me see if I was it on this one where I did that. Yeah. So for the example 4, if you were taking notes last time, you will remember that people were asking what is income summary, and I said it has increases and decreases the same like the partner's capital, and it takes all the expenses and then it takes all the revenue. It, you know, says revenue minus expenses, comes up with a balance. In the case of the previous question, the balance was 70,000, and then you close out income summary to get to 0. So this debit of income summary over here is to get it down to 0. All right, so we transferred the net income to the partners, and then we also closed the drawings account by crediting drawings and debiting capital. Capital goes down on the debit side, and that makes sense because we say that when the partner withdraws money from the partnership, they are essentially decreasing their investment in the partnership. So their capital balance should go down. Questions on the journal entries here before I revisit the 1T account and finish the rest of the T accounts? Okay, I don't hear anything and I don't see anybody asking in the chat. All right, so then they tell us that they want us to prepare the T accounts for partners' capital and drawings, assume that Arba and Barnett's beginning capital balances are 47,000 and 36,000 respectively. So the question actually gives you the balances. We spoke the last time about the fact that the normal balance of an account is on the side that it increases. So capital increases on the credit side, which must then mean that the balance is a credit balance. So I put the 47,000 credit balance in. And then we look over here, the way we post to the ledger, right? The T account is standing in as a type of a ledger here. The way we post to the ledger is we look for this account name in the journal entries. And whatever we did in the journal entry, we do exactly the same thing in the ledger. So over here, we credited this account with 16,000. So we must then credit with 16,000 as well. Please don't swap it around. Okay, all the hard thinking happens in the journal entry, and posting to the ledger is a copy and paste. Okay, so the 8,000 over here, that's also the same account name. You just copy and paste 8,000 to the debit side, right? So that's to correspond. And so we said 47 plus 16 minus 8 is 55,000, and that's the ending balance on Arba's capital. So now I'm going to give you guys 3 minutes until 11 o'clock to try, whether it's in your head or on a piece of paper or wherever it may be, to try and do the capital account for Barnett. Okay, so you've got until 11 o'clock to do the capital account for Barnett, at which point someone will give me the answer.
What is beginning capital? Because
Well,
it doesn't say here.
It says it in the question.
Perfect.
Mm-hmm. Whoever wants to give the answer at the end, please raise your hand. Don't shout out anything, okay? All right, at 11 o'clock, Scarlett, you can give me the answer. We've got 2 more minutes to go. Everybody else, please continue to complete the capital account.
Professor,
Yes.
do you just want us to raise our hand when we're finished?
Yeah, but someone,
Okay.
I think Scarlett is gonna take this one, but
Okay.
it's not so much raising your hand to finish, just if you wanted to run me through the solution. Sorry if I wasn't clear, but for those who wanted to participate here, there will be other questions that you can answer. Thanks for asking. Sorry if it wasn't clear. All right,
No.
so Scarlett, you wanna give it a go, yeah?
Yes. Capital balance was 36,000.
On the credit side, right?
Credit side, yes.
Mhm. And then,
Debit, sorry, and the income summary credit
Mhm.
16,000
yeah, okay.
and debit drawings 6,000,
Mhm.
balance of 46,000.
Thank you. So we see, and this is what, Scarlett is demonstrating what I was saying earlier, that once you know the rules and you do, do a little bit of repeating of stuff, it starts to come really easily, because here we know that the normal balance of an account is on the side that it increases. That's a rule that we apply to know that we put this balance on the credit side. The 16,000 is coming from the journal entry. We know that when we post from the journal to the ledger, we just put the amount on the same side, right? There's no changing debits to credits and credits to debits. And also over here, it's going on the same side. We know that when 2 numbers are on the same side of the ledger, they get added together. So these 2 numbers are added. This one is subtracted, and we come out to 46,000. Thank you so much. And so, thanks, Colin. So when you're doing these things, please see the pattern, because it's going to be the same thing, over and over again. And so it helps to see the patterns that you can answer the questions more readily going forward. So now we're going to close out drawings, because the question does ask us to do the drawings account. So I'll just set myself up here for Arbor's drawings. And so, again, debit and credit is just directional signals, debit on the left, credit on the right. It's based on the type of account that tells you whether the debit is a positive or a negative. Drawings increases on the debit side. So unlike capital that increases on the credit side, the plus is over here on the debit side, right? Which then must also mean that the normal balance for drawings for Arbor, right, is going to be on the debit side. So drawings balance 8,000. And if we want to close the account, it needs to go down to 0. And so again, what are we doing? Why are we doing this? If someone got lost, remember we did all these closing journal entries, and now it's asking us basically to show the ledger, right? Just using T accounts as the ledger. So if you know that you want this balance to be 0, because that's the point of a closing journal entry for a temporary account like drawings, is that the balance will go down to 0. You ask yourself, well, if I've got 8,000 plus and I need to get to 0, does it not then mean that I need 8,000 minus? Well, yes, you do. And plus well, I shouldn't say plus, but also the journal entry tells you to credit, right? Arbor's drawings account. It's telling you that. So you're just going to post the 8,000 from the journal to the ledger and say, oh yes, 8,000, I'm just writing closing here so that you guys know where the number came from. So now we are down to 0. Questions, anybody? All right. And then this is, fairly straightforward. So I'll just do the other one, because it's just going to be a repeat. And you guys can, again, if you are watching me, that's fine. But if you feel like you want to also practice, please get out a pen, pencil, whatever, paper, and put your hand or whatever to work so that you can feel more engaged. I did not give myself enough space here. All right. So for Barnett, again, the balance is what was given in the question, the 6,000, also on the debit side, right? And then for closing, we're just going to copy and paste. So we're crediting 6,000 as part of the closing entry. And it's, pretty simple. Pretty simple now to just say, okay, so the final balance, and I'm putting it on the debit side just because that would be where the normal balance of the account is. Final balance 0. So now we've answered this question, right? They asked us for the closing entries, they asked us for the T account. So we are done, right? If you look at this, it's all done. Anybody have still a follow-up question there for me, or anything that you want to add to the discussion? All right. Okay, so we are done with 5. Let's move on to 6. 6 is a little bit different, in the sense that there are actually salaries in this question. So we'll be able to see how we have to handle the salaries of these people to make sure that we, understand how the allocation will work. So ESU, I'm looking at example 6, and I did add all the examples to the Google Doc. If people are accessing the Google Doc, you can find the examples as well. So ESU company reports net income of 55,000. Remember, it's the net income that you have to allocate between the partners. So it means that 55,000 is the maximum amount that can be allocated between them, right? You can't go over it. You also shouldn't go under it. And what makes this useful or convenient is that you can check your work after you allocated everything to each partner. The final total of everything that was allocated should come out to 55,000. So the partner salary allowances, so there's the salaries are Espino 15,000, Sears 5,000, and UTEC 5,000. So per the the theory per the textbook basically that we were reading before, remember that partners could have salary allowances and then split the remainder on some type of ratio. And that's exactly what's happening. So here's the rule, right? The trick or the rule or whatever. When there's a salary allowance and or an interest allowance, those amounts always have to be allocated first. You can't, split the money between the people based on whatever ratio and then allocate the salaries. You have to allocate the salaries and the interest, if there is interest first, and anything that's left over should then be allocated further on the ratio that the question gives you. And I'll demonstrate this if it wasn't clear, as I'm explaining it, because I'm explaining a little bit in the abstract. We'll see it play out now in practice. So indicate the division of net income to each partner, assuming the income ratio is 50 to 30 to 20. So if you read this, you should be able to recognize that it's saying 50%. One partner receives 50%, 30%, and then 20%. So now the question is, who gets what? Well, you assume that it goes according to how the question was set up. So Espino is mentioned first. So Espino would be the 50%, then Sears is the 30%, and then UTEC is the 20%, and together it adds up to 100%. All right, so this is a little bit different because it's three partners, so you have to look at the ratio of how things are split in three different ways, or not three different ways, but in three ways. Questions? Sorry, this touchpad is so sensitive. That's why sometimes the screen goes small. I tried to fix it, but I'm not able to. Any questions on the split before I show you how we tackle the answer? Yeah.
So basically what we're doing is pretty much division for
Yeah.
this one?
Yeah,
Okay.
so while you first allocate the salaries and then you're going to divide the rest, whatever's left over after the
Right.
salaries are given. Yes.
Okay.
So you have the right idea there. All right. Okay, let me just do it, and then maybe as I'm doing it, people might have more questions as well. So this is example 6. Actually, let me leave some space because it gets a little bit too crowded. All right. So I think it does help to kind of set this up in a tabular form, because it can get a little bit crazy if there's a lot of stuff to divide. It gets a little bit crazy to keep track of everything. You don't have to use a table, but I think it does give you a better idea of where you are in the split. Okay, so often you'll see, I believe you'll also see in the textbook, and I plan to go into the textbook later on just to show you exactly where these things are again. You'll see that they also have tables set up like this. So we have the people's names across the top over here, and then also a total column to make sure that we're only allocating what we should. And then this column over here, we're kind of going to use to explain what it is that we are allocating. And then we'll add up everything in the hopes that we get to 55,000, right? So remember what I said. The salary allowance is allocated first, and the salary allowance is not split based on this 50, 30, 20. The salary amounts are given to you, right? 15,000, 5,000, and 5,000. So you put them straight in at the amounts that were given. You don't have to do any extra calculations, and all of that is going to, all of that is going to add up to 25,000. So at this point, we've already allocated 25,000. So then somebody tell me, what do we have left to allocate?
35,000.
Not 35, but 30.
Oh, 30,000.
Yeah, 30,000. So that's an important point, right? You can't allocate more than the 55,000 that you started with. So if you already allocated 25,000, what is left, and this is sorry, and this is what we call the remainder over here. That's the book will sometimes also refer to the remainder is I'll just put a small calculation here, is the 55,000 that we started with minus the 25,000. So that equals 30,000. So it's that 30,000 that is now going to be split between the partners based on the ratio that we saw, right? 50, 30, 20. That's how we will split the remainder. So what I'll do here is I'll put the person's name, Espino, and then just the calculation for how, I mean, it's obvious, but just in case. So we're going to take 30,000. Let me put a comma so it's easier to read. 30,000 times 50%. That's their split of the remainder. So it just coincidentally is the same amount as their salary, but it's not a salary, it's their split of the profits, all right? And then Sears is going to be the same 30,000, right? But times 30%, because in the question they told us that's the percentage that that person gets of the split. So that comes out to 9,000, and you put it in right in the correct column related to that partner. And then you take the final person, the same remainder, 30,000, but multiplied by only 20%, because by, the partnership agreement rule, that's their entitlement in terms of the split of income. So 6,000 is what they get, okay? And so all of these together, when you add up, these different remainder splits, they need to come back to the same number that you were allocating. Okay, they have to come back to 30,000. So the total is 30,000. And so then now what we can do is we can draw a line under here and just sum everything up to see what each partner is getting. So it should be fairly obvious, but I'll just do the calculation that Espino is getting 30,000, Sears is getting 14,000, and UTEC is getting 11,000. And together, these should come up to what? I
55.
couldn't hear you. Yeah,
55,000.
55.
Thank you. Yes, 55,000. So there should be 105. Let me see if I can fix this. Yeah, this thing is acting up. Okay, I'll do the sum. Literally just doing all three across. Yes, it's 55, and across and down it's also 55. So we are correct. So that's how we split it when there's a salary allowance. If there had been an interest allowance, we would, allocate that as well. And there are some questions where you allocate the salary and then the interest, and only then afterwards do the remainder. So now the question becomes, what does this mean? Right? Where does the 30,000 go? This isn't asked for in the question, but I'm just, because I love being a little bit extra as usual. I'm going to show you where this ends up. Okay, so the 55,000, the way we allocate this to the partners is that we would debit income summary with 55,000, and then the partners, right? So Espino would get 30,000 in the capital account, a credit of 30,000. So see how it becomes the same as what we were doing before in example 5. Sears will get their 14,000, and UTEC will get 11,000. So we do that calculation, right? After we finish the income statement, we figure out what net income is. Then we do the allocation between the partners to come out to a total for each partner. And that's the number that's going to end up in the closing journal entry to transfer, right? It's the closing entry to transfer net income to the partners. And it's still net income, even though you see a salary, but the salary is coming out of net income. The salary just helps us to know how to allocate the net income properly. Questions on this one? All right. So we answered that question because we did the division of net income. It wasn't asking for the journal entry, but I showed it to you because I think it's important for you to see how these numbers tie into actual, journal entries and not just see it as a calculation that gets done, without any context. If we're looking now at example 7, and we'll probably do this one and then maybe after we can take a quick break. Example 7 has what I was referring to a few times. It has interest and salaries. Okay, so I'll show you in this example how to allocate the interest, how to allocate the salaries, and then they also speak about how the remainder is being shared. So Joe and Sam company reports net income of 28,000. So now you know that 28,000 is the absolute maximum amount of money that you can allocate between the partners. You can't allocate more, but you also shouldn't allocate less, right, than 28,000. There are interest allowances for Joe, 7,000, and for Sam, 5,000. So they gave you the interest amount. You didn't have to calculate it as a percentage of any other balance. And then there are salary allowances of Joe, 15,000, and Sam, 10,000. And the remainder is shared equally. Show the distribution, so 50-50, right? Show the distribution of income that would appear below the income statement. And it does go below the income statement, the allocation between the partners. Now, who's going to tell me that who can see that we already have a problem before we even start? Or do you see that there might already be a problem before we even start allocating anything? Look at the amounts that the partners need to get and look at the amount of net income. What do you see?
So if we add the interest and the salary allowances, it's more than the net income?
Yeah, that's exactly it. So it's Margaret, right, who's speaking? Is that right?
Yes, Margaret.
So Margaret, what do you think we should do? Should we just not give them the salaries and the interests or only give them some of it, or just, you can take a wild guess. What do you think we should do?
I'm not sure actually.
Okay, that's fine. Yeah, that's fine. I'm just putting you on the spot, so forgive me, but I'm open to wild guesses. So basically, Margaret pointed out that when you add everything together, it's pretty obvious already that there's a problem because the salary alone, the two salaries are already 25,000, right? And you add to that another 12,000, so it's 37,000, but we only have 28,000 to allocate. So here's the deal. Even though we don't have enough money to allocate all the interest and the salaries and still end up in a net positive position, the rules, this is where the rules come in again, right? The rules require that we still go through the process of allocating interest and allocating salaries to the partners. And if we end up in a negative, which we will, I'll show you that we basically do a calculation with the remainder where we take some of what we allocated to them away from them, but we have to we have to allocate the interest and we have to allocate the salaries, because those amounts are determined by law, which is the partnership agreement. Okay, so I can't walk up to them as the accountant and say, well, we don't have enough income, so I'm not going to let the stuff go into your partner's capital, accounts, because they are entitled to that, even if the partnership is not able to provide the appropriate amount of money at this time. So let's go through and see how this plays out, right, in reality. For example 7. So I'm going to do a similar setup here, a tabular format, right? So we've got Joe and we've got Sam. And then we have the total column where we will always just keep track to make sure that we are ending back on 28,000. And so here we go with allocating the interest allowance, right? We will allocate that first, just based on the fact that it came up in the question first. It doesn't really matter between interest and salaries, which one you do first. So in the question, it said that Joe had interest of 7,000 and Sam was 5,000. So I'm literally just taking the number out of the question and putting it into the table, right? And obviously together, that's going to be 12,000. There, the interest is allocated. Now I go for the salary allowance allocation. Going back to the question, I see that it's 15,000 and, sorry, I keep doing that. It's 15,000 and 10,000, okay? So Joe has a salary of 15,000 and Sam has a salary of 10,000. And again, we add it up. That's 25,000. Now we said, and Margaret pointed out, that we are allocating more than we have. We've allocated 37,000. We only have 28,000 to work with. That means we've gone over by 9,000. So we literally have to go and take the 9,000 back from the partners, and we treat the 9,000 as a remainder, just like we had a remainder in the question before, but this remainder is going to be what we call a deficiency, meaning there's not enough money, right, for what we are trying to do, because we're saying 28,000 net income minus the 37,000 that we already allocated, that equals negative 9,000, right? It's a negative remainder. And so let me see what I did up here. Sorry, I skipped the line. Okay, I didn't. So what we'll do now is we'll put Joe, and Joe will get minus 9,000 times 50%, because it's an equal split. It said that each partner gets 50% of the remainder. So 4,500 negative, and Sam, same thing, right? 9,000 minus 9,000 times 50%, so 4,500 negative. And together, those two amounts will obviously be minus 9,000. And so now we draw a line. And you can, the format can also be, the negative numbers can also be in, oops, sorry. The negative numbers can also be in parentheses. I'm not going to waste time doing that now. You can see that it's a minus over here. So what we'll check now, before I add up anything else, I'm just going to check to make sure that I got back to 28,000, and I did. All right, I got rid of the 37,000 was too high. I needed to get back to 28,000. So I took money away from the partners. So this amount is in fact 28,000. So I'm just going to sum up what each partner has. That's 17,500. And then I'm going to sum up over here is 10,500. So together, these two numbers are also 28,000. So I'll just add across. Oops, sorry, I already had this. I'm coming through. 28,000, and we've already tested that down. It's also 28,000, and that's the same amount as the net income that we were given in the question. So this is what happens when you allocate salaries and interest, but you allocate more than the net income that the company has at its disposal. So you end up having to take amounts back, but you take it back from the partners in the ratio that is given to you in the question. And in this question specifically, it was equal 50-50, but it could have been 60-40, it could have been 70-30, it could have been anything. That whatever the question says is what you have to use. Anybody need clarification on anything? All right. So let's take a break for 10 minutes to 11:37. And then when we come back, you guys will have an opportunity to practice a question on your own, which will be example 8. And after that, we can move on to partnership financial statements. So we're taking a break until 11:37. I'll pause the recording and I'll be around during the break if anybody needs to ask me anything. People want to hear stuff. All right. So what I'd said before we broke for the break was that you guys will have an opportunity to do example 8 now by yourself. So I'll just read it with you, and then you can I'll put the previous solutions up, and you can kind of follow those solutions. If you did not yet download this document, or if you don't have access to it, I guess just take a picture of the screen so you have the question, because I'm going to go between the question and also showing you how, I did the previous solutions. So Lee May Company reports net income of 57,000. So again, you already know that 57,000 is the maximum that can be allocated. We should not allocate less than that either. The partnership agreement provides for salaries of 15,000 to Lee and 12,000 to May. So you know that there's a salary allowance, and from our previous work, we know that the salary has to be allocated first. They will share the remainder on a 60-40 basis, 60% to Lee, so 40% to May. Lee asks your help to divide the net income between the partners. So you have to do the division. And then this is why you want to read these questions closely, also to prepare the closing entry. So you guys can, again, if you don't have the question open in front of you, just take a picture of the question or something, because I'm just going to show the previous solutions of the questions that we did together, because that's going to help you to answer this one. So let's say you can go until 11:50. So 8 or 9 minutes, probably more than you need. And then I'll take someone who hasn't spoken yet today. You can raise your hand to answer some or all of this question. So example 8, you're doing it on your own. I'm going to the solutions where you can see, maybe not the solution with the deficit, but the previous solutions that show you how to allocate salaries and then a remainder, and then to do the closing journal entry. You have until 11:50 to do the question.
Professor, can you please show that question again?
I'm going to go quickly back so you can see it, and then I'm going to have to go back to the solution. You got it, Shafak?
Yeah, thank you.
Okay. Nisa, you want to give the answer, or do you have a question for me right now?
I give the answer.
Okay, cool. I got you. Okay, 2 minutes to go. Most people may be done already, so you can just relax for 2 minutes. Sorry, then we'll have Denise give us the answer in about 2 minutes. All right, so we're at time. So Tanisa, can you go ahead and give me your answer, please?
Yes, so
Mm,
the salary allowance for Lee would be 15,000.
All right, Yep.
For May, 12,000,
yep,
and the total is 27,000.
thank you. Next.
Then we're gonna do the reminder, which is 57K subtract 27K, gives us 30,000.
Mhm. All right,
Then now we're gonna find what's the interest. So it'll be Lee, 30,000 times 60%,
right,
which gives us 18,000.
right,
And for May, 30,000 times 40%
right,
gives us 12,000.
good.
And we're basically going to add the 30,000 on the total side.
Yep.
Then we're gonna add each allowances, well, add everything in total. That gives us 33,000,
Okay, yes,
24,000 for May,
yes,
and the balance is 57,000.
perfect. And the 57,000 is the same as what
As
we were supposed to be allocating for net income,
which is
correct?
the capital, correct. So
Mhm.
then now we're gonna close entry. So it's gonna be income summary, lease capital. We're gonna
How
debit,
much, how much you gonna
sorry,
put on income summary?
it will be 57,000 debit.
Yep,
Then lease capital will be 33,000 credit, and rate
yes,
base capital will be 24,000 credit.
because we're taking the ending number, right? Not
Yes,
just the salary or just the remainder. Perfect, 24,000, and those two add up to 1557, and this is the closing entry to allocate net income to the partners. Thank you. That is correct.
welcome.
Any questions, anybody on anything to do with this allocating of income? Because we're basically done with that and we're gonna move on to partnership financial statements next. So anybody wanna ask me anything? Just checking that there's no hands raised. Okay, so you know, you've seen everything now. I think probably the slightly harder part of this is when we have to allocate more to the partners than is available, and we kind of have what we call the deficiency, and we got to take some money back. Remember this, but just follow the steps. Okay, if you follow the steps, knowing that you have to allocate the interest and you have to allocate the salary, regardless of whether you're allocating too much, you do that, and if there's any type of negative amount left over, you just take the money back from the partners. Also, the interest and the salary are not allocated based on the fixed income ratios that are given in these questions. The interest and the salary are generally a separate thing. Normally they're given as dollar amounts. Sometimes the interest is stated as a percentage of, for instance, the partner's capital balance, and you'll have to calculate the amount. It's only really the remainder that is going to be on the fixed income ratio, like the 60-40 or the 50-50. I have seen students sometimes mess up by trying to take the salary amount and then still multiply it by 60% or something like that. That's not how this works. Those numbers are fixed. Whatever each partner is supposed to get, that's what you should be giving them. Okay, so those are some of the pitfalls with income allocation, but for the most part, it seems like you guys are okay with it. And your best next stop is just to get going on the homework and make sure that you don't have extra questions. Remember, everybody should be getting 100% on the homework. It's unlimited attempts. And there really shouldn't be, an issue with you asking me questions far in advance so that you can get the answers right. Okay, so remember when we first started, I told you there were four sections basically to this chapter. There was forming a partnership, which we went over. There's dividing the net income and loss, which we just finished. And then the next piece is partnership financial statements. When you were in accounting one, you dealt with the sole proprietor and you dealt with those financial statements, but the financial statements are similar for partnerships. You still have an income statement. The income statement looks exactly the same as the sole proprietor or single owner business, except that at the end of the income statement, you do the net income allocations, right? You would have had something called an owner's capital statement, or something to that effect in accounting one, where you show how the owner's capital increases or decreases with various items. In this case, we have a partner's capital statement that I will show you how to draw up. That's basically just showing the movements in the partner's capital over the course of the year. And then, or the period, whatever period that may be. And then you also have the balance sheet. The balance sheet for assets and liabilities is exactly the same for partnerships versus sole proprietorships. But when it comes to the owner's equity part of the balance sheet, instead of just having one owner, so one owner's capital balance, you will actually have two or more partners' capital balances that you will show. And the statement of cash flows is exactly the same, for a partnership versus a sole proprietorship. So we won't be dealing with that statement here in this work, but please note that in chapter 17 that we'll be doing together, we do cover a statement of cash flows in depth as it relates to corporations, right, to companies. So without further ado, the easiest way to figure out what's happening with the stuff is to look at some examples. So if we continue here with these exercises, when we look at example 9, we see that we are being that we're being asked to prepare the partners' capital statements at December 31, 2018. So again, partners' capital statements are just showing the changes in the partners' capital balance over the course of some period of time. So I will do this one and you guys can follow along. Do this one to show you how we set it up. And then the next one, example 10, I'll have you guys doing on your own to make sure that you actually understand what's going on. And then we'll just keep working through the examples until we get to liquidation and finish up. That won't be, we're not finishing everything today. We'll probably be done with partnerships by Thursday. All right, so assume that Lee and May, so it's kind of the same people from before, right? That Lee and May's capital balances at January the 1st, 2018 are 28,000 and 40,000 respectively. So they're telling us what the beginning capital balances are. Lee and May made additional investments of $2,000 and $3,000 respectively during the year. What that means is just that these partners gave, extra investments into the partnership. So they just gave some cash, and we would have said debit cash and credit partners capital, just like we did in the formation journal entry. So this must mean that these extra investments would increase their partners' capital balance. And then Lee and May had drawings of 1,500 and 2,000 respectively. So drawings are when, we know this already, stuck records, right? Drawings are when the partners take money out of the business for personal use. So that must mean that it decreases their partners' capital accounts. And then prepare the partners' capital statements at December 31, 2018. Note the net income numbers were calculated in a previous exercise. Where were those numbers calculated? Well, in example 8, we calculated how much each partner is going to get out of the 57,000 of net income. So the question is asking you to use the net income allocation from example 8 as part of your work in example 9. All right. Okay. So let's go for it. So this is example 9. We're now in the realm of financial statements. So we usually go through, right, the whole process. We put the name of the company. You have to identify the company that the financial statement is for, the name of the statement, so that a reader will know what they're actually looking at. And it's for a period of time or at a point in time, right? A partner's capital statement is going to be for a period of time because you are showing the changes over time. Something like a balance sheet is a snapshot at a point in time. So it is going to be at a particular date. So the name of the, sorry, the name of the company, Lee May Company, right? This is going to be the partner's capital statement, right? That's the name of the financial statement that we are working with. And then it is going to be for the year ended December 31, 2018. That's most of the time in Wiley, if you're doing these questions, they put most of the stuff in already. Sometimes they'll test you to see if you know whether it's at a point in time or period of time and leave a blank so that you will have to fill out this part over here, right? But often they've already filled it out for you. So the way we're going to do this is, again, like how we had that tabular format before, right? We have our Lee, our May, and then the total, because we're kind of going to show, right, what each partner has in their capital balance and what that the total, you know, is what it's supposed to be. And so when you think about a partner's capital situation, you're really thinking about, you know, what are the movements in the account? So we know based on the question that these people started out with a balance at the beginning of the year. We also know that they added extra money into the company, which should show up in the partner's capital statement. We also know that they earned net income, which we just calculated before, and that should show up as well. And we know that they subtracted some drawings, right? That they took out drawings from the account and that has to decrease the account. And once we account for all of those items, we will have an ending balance. And that's information that's important for each of the partners because it's showing them at the end of the year what it is that they are left with as their investment or their stake in the partnership. So we start with capital on January the 1st, 2018. And when we go back to the question, it has to give you the number. You won't just know the number yourself. There you can see that Lee is 28,000 and May is 40,000. That's where the capital numbers come from, all right, from the question. So it's 28,000, 40,000, sorry, 40,000. And the total is going to be 68,000. I'm using the dollar signs at the top of the list of numbers. I'm being a little bit more formal because we're doing financial statements. You would normally, this is from accounting one, you won't remember or may not remember this, it's fine. But you normally put the dollar sign on the first number in a list of numbers. All right. So there's the capital. If it's like a public company's financial statements, you don't have to, they don't normally put dollar signs. They'll just say like amounts are in thousands and then just show dollar or something at the top, and it's assumed that all the numbers are in the same currency. And so we have the capital balance. We have to add, right? What are we adding on? The additional investment of each partner will increase the account, so that's an addition. So if we go back to the question, what did they give? Lee gave 2,000 and May gave 3,000. So we're going to add 2,000 here and we're going to add 3,000 there. So that's a total of 5,000 additional investment. There's something else that needs to be added as well. It's coming from the previous question. The exercise said that net income numbers were calculated previously. So when you go up, you remember that we allocated 57,000 of net income between the two partners. You got to pull that number down now, and hopefully you are understanding here that all these things are related, right? You're not doing them in isolation. The net income from the income statement does end up in in the partner's capital statements because you are transferring the income to the partners in this journal entry. So it will go from this journal entry into the ledger, and then from the ledger into the trial balance, and then eventually you also show it on the partner's capital statement, which is the financial statements. Okay, that's the accounting cycle part of things. So we're literally going to take the 33,000, right, from the previous calculation, that's Lee's net income. The 24,000 is May's net income, and together they make the 57,000 that we allocated before. Questions, anybody?
So the capital that they add in January 1st is not related to the net income. So
No.
first they add the capital and then they got the money from the net
Yeah.
income and
Yeah.
it's added to the capital.
Yeah, the capital on January the 1st is what they ended up with as capital on December 31st on 2017. That's the, the ending capital number, which is the sum of all the transactions that happened from the beginning of the partnership up to that date. So it's completely unrelated to the net income that they earned in 2018.
Okay, because it got me a little confused because when we close the entry for the income summary,
You add net
we
income.
credit the capital for each
Yeah,
of them.
because you're showing, you mean you're crediting the beginning, you're showing the balance, or do you mean you credit net income?
For the net income. when
Yeah,
we close.
this is the same that you're doing here because you're adding it, but they're not the same thing. They just get added together. Yeah.
Okay.
It's like if you, let's say for argument's sake, you have a bank account at Citibank, right? And you have a balance in the account there already of $2,000, and then you go and make a deposit of another $3,000, right? You end up with $5,000. We're doing the same thing here. This guy started with a balance of 28,000, went and made an additional investment of 2,000 that gets added together, and then all the income that they earned for the year gets added as well because it's all increasing their balance in the company.
Yes. Okay.
That was like the worst yes ever.
I know. No, I'm looking. Yeah. So basically, it's like crediting because it's both credit, right?
It's crediting.
Crediting
Yeah.
revenues and crediting owner's capital. Yeah, I do understand. Yeah.
Yeah. If this
Yes.
if this was a T account, these would all be credit balances. Or not
Okay,
balances,
perfect.
but these would all be on the credit side. That's probably the best way to put it. Okay. So you got it. All right, thanks for asking these questions. You never know. Oh, I thought the formula would stick, but I think I probably typed it in. Yeah, you never know when somebody else is also stuck on this. So I don't mind people asking questions. Otherwise, I feel like I'm talking to myself anyway. All right. Let me make sure that I didn't miss something up there. Okay, so we add, this is only a subtotal. This is not the final balance. I'm just added, sometimes the textbook does this, so I'm doing it also. They kind of subtotal all the things that get added together, and then we take off the drawings. Okay, so yeah, I just added these three numbers that are in a row. Now we have to say less, and we still have to deduct the drawings. I don't put the drawings in as a negative number. You just have to remember to subtract it. But if you want to put it as a negative, you can. So 1,500 and 2,000 are the numbers that you are looking for drawings. So Lee had drawings of 1,500 and May had drawings of 2,000, which gives us a 3,500, right? Total for drawings. And so this final, balancing out here, this is going to be the end of our calculation. So 63,000 minus 1,500 gives me 61,500. Sorry, I thought I put a line. Yeah, I didn't. Okay. I can't get this right now. Good grief. Just 1 second, guys. All right. And then 67,000 minus the 2,000 of drawings is 65,000. And then the total 130,000 minus all the drawings is 126,500. And normally this would also have a dollar sign, right? If we're just being a little bit pedantic here about how this thing should look. The dollar signs will be at the beginning and at the end. Doubtful that you will, in Wiley again, they probably won't hammer on about dollar signs, but just in case, sometimes they can be a little bit weird about what they ask you to do. So capital December, and by weird, I mean unexpected, not weird, bad, just unexpected. So capital December 31, 2018, and those are the balances. So to recap, this is a partner's capital statement showing the movements of the capital accounts for the course of the year. In this case, you start with beginning capital balances that would be given to you in the question. Those are balances that would have been carried forward from the previous year, and they amount to the total of all the transactions that have taken place, right, relating to partners over the course of the life of the partnership. In the question, it told you that there was additional investments which we have added over here, because anytime the partners put money into the partnership, we should show that their partner's capital goes up, right? So that's where that came from. The net income is also an increase to partner's capital, as we have heard before, and we did the journal entry over here. We took these numbers from the previous question because we were instructed to do so. We want to make sure that we're still using the appropriate amount of net income at 57,000. This line over here is just a subtotal, so we don't go completely crazy with lists and lists of numbers, right? Not knowing, what's being added or subtracted. So all I did was just add all these numbers together and subtotal them. If you were doing a T account, all these numbers would be on the credit side of the account, and the drawings, which is a subtraction from partner's capital, would be on the debit side of the account. So I take 63,000, subtract 1,500, and that's how I got to 61,500. And we do the same process across from here, and then it tells us that capital at December 31st, 2018, that is the balance for everybody. Which financial statement are these numbers going to go to now? Does anybody want to take a wild guess and tell me where is this going now, or are we just doing it for our health? Where do you
Net
think
income?
No, we've already done the income statement, so the net income is included. There's another financial statement that is going to show you the total for each partner's capital. Do we know what that is?
Owner's equity statement?
Yeah, so it's going to go to the balance. No, well, we did the partner's capital statement. That's like owner's equity, but I thought you were going to say something different, so I've already put the answer. It's going to go to the balance sheet in the owner's equity, or it's going to go in the owner's equity section, okay? Section of the balance sheet. That's where it's going next. You guys want me to show you? Because I feel like maybe people don't remember this. Owner's equity section of the balance sheet. No takers?
Yeah, you can show us. Yeah.
Okay, yeah, all
Thank
right.
you.
So here goes the balance sheet. Hooray, right? More work for me. I love it. I'm not even joking. So
This is good.
So this is the name of the company, name of the financial statement. Balance sheet is at a point in time. So December 31, 2018, right? What's happened? Yeah. All right. So that's the balance sheet headings. Now the balance sheet is normally, we know it as the assets, right? If you remember the balance sheet equation, assets equals liabilities plus owner's equity, right? So under normal circumstances, if you were doing a balance sheet, you would, start with the assets and you'd list all the assets, and then you'd go and do the liabilities and owner's equity part of the balance sheet. We don't have assets that we need to list right here. Right now, we would be wasting time if we created an asset section. So I'm going to go straight into the liabilities and owner's equity section, equity section of the balance sheet. And we are also not focusing on, so it's kind of an excerpt of the balance sheet because we are also not focusing on liabilities. We're focusing specifically on the owner's equity, right? And under owner's equity, we're going to put the two capital accounts. So you've got Al Lee capital. And here, there's no trick here. You go for the ending number. Okay, not the big, obviously not the beginning number, because that's at January the 1st. This is the balance sheet at December 31, so it should be the balance at December 31 as well. So you're going for 61,500. That's Al Lee's capital account on the balance sheet, and then our May is going to be the 65,000, and then you're going to have total owners, equity, and you add those two numbers together, and no surprise, lo and behold, this number and this number should be the same, because it's the same partner's capital that you are now just showing how it looks as part of the owner's equity on the balance sheet.
And now it makes sense.
Good.
Can I ask you something?
Yeah.
What about the statement of cash flows? Because the last class I took, we didn't really focus on
Yeah.
it.
So I
We
was
didn't
saying,
get
I made a comment about that, but you may have missed it when I was going over the theory. The statement of cash flows is the same for, it's going to be, it's similar for a sole proprietor and a partner. So we are not, there's no need to go over the statement of cash flows. Also, as part of accounting 1, you are not required to do a deep dive in the statement of cash flows, which is probably why your professor didn't go into it at all or very much. We will spend the entire chapter 17 in this class doing the statement of cash flows from beginning to end. So that's when it will come up, and we'll do it in the context of corporations, which is really more often than not, the types of cash flows that people are exposed to, especially if you end up going into accounting. And it's hard. I'm not going to lie.
hard.
Yeah, it's hard. Statement of cash flow is one of the hardest topics in accounting. So am I saying it to scare you? Absolutely not. I'll always be, I'll always be upfront with you guys and frank. Some of the things are not hard in this class. I know everything is hard, right? And I'm the professor, so me saying something's not hard is obviously like blah, 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 right? Yeah. But there are things in the class that are very complicated. And chapter 17 is one of them. So, that's coming later on. You don't panic now, don't borrow from tomorrow's worries. That's not the purpose of me saying that. I am just saying it to one, answer your question about what about cash flows, but two, to just let you know that I will, give full warning when we are running into something that is going to be difficult for basically everybody. It doesn't matter, how smart or how not smart you might think you are or whatever. It's going to just take a lot of repetition with the cash flows for everybody to get it. Okay, so that's a long answer about cash flows. So far we've done the partner's capital statement. I showed you what the balance sheet looks like. We haven't done an income statement yet. It's not going to be much different from the income statement that you had before. But I wanted you guys to practice doing this work, the partner's capital statement yourself. So I am referring you to example 10 on the sheet of examples. I'll read it through with you, and then we'll do like we did before. If you don't have the questions at your disposal, please take a picture or do something so that you will be able to refer back to it, because I'm going to leave the screen on the solutions from the previous questions so people can see the format. So just to read example 10, for Starlight Company, beginning balances on January the 1st, 2018 are Gary Stark, 20,000, and Jim Nyland, 18,000. So see how the questions kind of, the rhythm of the question is very similar, right? This is the beginning balance. So you already know based on what we did before where you need to put that. During the year, drawings were stock 8,000 and nylon 5,000. So we had this before, so we should know how to do that. Net income was 30,000 and the partner share income equally. So that should be easy enough to calculate. What we don't have in this question that we had before was additional investments, right? So if the question is silent on additional investments or silent on drawings or something like that, you can make an assumption that that number is just not there for that company. So they ask you to prepare the partner's capital statement for the year and prepare the owner's equity section of the balance sheet, right, at December 31, 2018. So basically exactly the same thing we just did, all right? So I give you 10 seconds here, take a picture or open the question or do whatever you need to do to have access to the question. Okay, and so I'm going to put my screen on the solution from the previous question because it's going to help you to answer, the question I just gave you. And it's 12:20 now, so let's give it 10 minutes, probably too much time, but 10 minutes to answer this. So by 12:30, someone someone who hasn't spoken yet today will raise their hand and walk us through the solution. It is 5 more minutes. Remember, someone who hasn't spoken today yet will take us through the solution at 12:30.
Pastor, shouldn't I receive a money? I'm about to go back in my stuff and look at it, mommy. I can't do that right now. Please, just.
All right, I'm looking for a volunteer, someone who hasn't spoken yet today, to raise their hand and walk us through the answer to this one. Jefferson. Thank you. Go right ahead.
All right, I can try. I don't think I have it correct, but I don't know. I'll give it a shot.
I like
Um,
the attitude. Let's just go for it. Let's try. So I got the name of the company, name of the statement, and do you agree that it's for the year, right? For the year ended?
Yeah, for the year ended December
Mhm.
31.
So it's similar to what we had before. Okay, great. So what do you want me to do after this?
All right, so align them all, right? So
So the
G's third, J and Island, and then total.
perfect.
And then the first thing that I have here is that we do the capital
Yes.
for each person. So capital January 1st, 2018.
Yes.
And that would be 20,000 for Sturk,
Mm-hmm.
18,000 for Nyland. And then the
Mhm.
total of that would be 38,000.
Yes, that's correct. Next.
Then I did add income, the net income. It said that the net
That's
income,
correct. You're right. So add net income. How much is the
said
net
that
income?
30,000, but they shared it equally. So
Mhm.
then I just divided that in half,
Yep.
50-50. So that would be 15,000 for each.
Yes, that's correct.
And then I added all of that all
Okay.
together. So I did that would be 35,000 for Sturg, 33 for Nyland, and then the total of that would be 68.
That's correct.
Then I did the less drawings.
Mm-hmm.
So it said that it was 8,000 for Sturk,
Mm-hmm.
5,000 for Nyland,
Mm-hmm.
which it would total 13,000.
Mm-hmm.
And then total that, and then it would be 27,000 for Sturk, 28 for Nyland,
Mm-hmm.
and then 55 in total.
Look at you telling me you don't know if you got it right. Great stuff. All right, good.
I didn't get to the balance sheet
That's
yet,
okay. It's okay.
but I'll give it a shot.
You want to give it a shot? Okay, let's
No,
go.
I haven't
So
tried
we're
it yet.
gonna put the name of the company, right? I'm gonna do the company name quickly. Mm-hmm. And I'm gonna put the name of the financial statement, and we know that the balance sheet is at a point, at a point in time. So we just put the date. What do you want me to do now?
All right, so owner's equity.
Okay, so I'm first gonna put the heading, liabilities and owners. Equity. Owner's equity, to your point. Okay, and now what?
We start with Sturk.
Yes,
Sturk. Is it 27,000? Is the
yes,
total?
correct. Yep, you take the total because that, oh, I forgot this year, sorry. And I'm sure someone is telling us that we're feeling ourselves too much. I forgot to put
Oh, yeah.
capital. December 2018, right? Sorry to whoever's is chewing their nails because they're like, you didn't put that in. So when you put that in, then you know, Jefferson, automatically that it has to be this number, right?
Mhm.
That that is gonna go in. So 27,000 is the number. And what do you want me to do next?
Nyland, J Nyland at 28,000.
Mm-hmm.
And then I think we're supposed to total that,
Mm-hmm. You
which
are.
would be 55,000.
And that's called total owners equity, and boom, oh, I already had the sum, sorry, 55, correct.
Awesome.
You did it. Bravo. Thank you.
I was about to ask, where did you get the 15,000 net income? But then I realized the question said to divide the net income equally.
You got it. Yeah, the 30,000, right? Equal between the two partners.
Yeah.
Okay, Louis, you got it. Do you have a question for me? Is your hand still raised from before?
I don't know, question.
Yeah, no, you're good,
No,
Louis.
it
I
was
was just,
it
okay,
was
I
from
was
before.
asking, see, okay, no worries. Any other comments or questions here on the work for example 10, folks? Thanks for asking, Louis, about the 30,000. I think you saw now that that's the net income would have to be given in the question, or you must have calculated it somewhere else, but it's impossible for you to just know the number. It has to come from somewhere, okay? All right. So that's the partner's capital statement and the balance sheet following, right, all the calculations that you did for splitting net income and so on. So we've kind of hammered that in a few times now, and hopefully that means that when you're attacking the homework, it becomes clearer to you. Okay, so we're doing really great for time, which means I'm not going to push the issue here to start the next question. I think you guys deserve to leave a little bit earlier today, but I'll stick around in case people have other questions for me. So just to give you an idea of coming attractions, on Thursday when we get together, we will just see what an income statement looks like for the partnership. It's going to look basically exactly like how an income statement look for sole proprietorship, but you will have to allocate income. It's going to be very simple. And then the biggest topic that we will cover on Thursday is partnership liquidation, which gets a little bit tricky, but there are 4 steps that you need to follow in order to get it right. And so if you just listen to what I'm saying and you practice along with me, you'll be able to nail this for the, in the four steps, but you have to be kind of systematic about it. So don't miss Thursday's class because it is, the liquidation is probably a little bit more involved than you can just teach to yourself. And yeah, that's what we'll do. So I'm going to call it here and let us go on with the stuff on Thursday. We may even finish partnerships before the end of the time together on Thursday. So I may start just lightly on chapter 13. So just be prepared for that Thursday may be a split between chapters 12 and 13. Any other parting thoughts or questions that anybody has for me? You can call them out now.
What are we going to go over chapter 13? What do you suggest to read?
That's what I put in the readings. That's what I'm suggesting. So when you look at, do you see this? Under your student view?
Yeah, but I
This-
mean for next week from
Oh,
like for next class,
that's
sorry.
right. We're probably only gonna hit the first learning objective. I don't think we'll even get to stock issuances because I'm not trying to push that hard because we're running a little bit ahead of schedule, but I know that we might spend some time later going over the homework for chapter 12. So just read point 1. I don't think we'll get to point 2, and even if we do, we'll get there in a very, very light way. Okay.
Okay, perfect. Thank you.
Professor,
Yes.
hi. I really want to practice more before, I feel confident answering questions. So I was wondering, in the Wiley account that we have, is there anything that we can use as a practice review before actually entering the homework?
I have to think about that. I mean, I didn't set up extra practice questions because the homework has unlimited attempts. So I figured the homework is your practice.
Okay.
And there's no penalty. I think there was one setting that was wrong on one of the homeworks where there was something like you could see the solution after point in time and then it was going to deduct points, but I took that away. I think that was like a bug that crept in. So what you should be seeing, and if you don't see this for some reason, just let me know. Sorry, who's speaking? The system isn't telling me who's speaking.
Sorry, Jahome Liberato.
No, it's fine. So Jahome, if go in it should be unlimited. Everything doesn't matter how many times you submit, you can check your answers. That was the point of the homework. So my thought would be that you're actually better off using the homework as your sandbox to practice and to figure things out than having a
Okay.
whole separate set of questions to practice and then still having to spend the time on the homework.
Okay, so since this was recorded, then I could use the examples again that we were going over today, right?
Yeah. This is
Okay.
this